stocks, they were under pressure yesterday. To discuss what's ailing the pharma stocks, we have Vishal Manchanda, the pharma analyst at Systematix, who joins us on the show. Well, Vishal, good morning and thanks a lot for joining in. Yesterday, I reached out a lot of sell-side analysts and asked them what's going on with pharma. Everyone had a question mark on mind. And then there was this Reuters article that did the rounds that said that, that could be a possible $2, for a generic drug that could come out. That's what, post that US election. And it appears that's what made the street very, very nervous. But feedback late in the evening said that that could not have had such a big impact. So do you think that was a knee-jerk reaction and you think normalcy will resume from today onwards?
Yeah, I think I did go through that news article. So I think this really does not have any impact on the generic manufacturers. My sense is the larger impact will be on either the insurer or the retail channel there. So what's happening is the copay on certain generic drugs is being cut down to $2 per patient. So what the copay is essentially what patients pay as part of the total prescription bill that is generated. So their portion of expenses towards the prescription bill. So that is reduced. It was higher earlier and that is being reduced. So either the insurers will pay a larger amount as reimbursement of the prescription bill or they'll cut down the list price. So I think if the list price is cut down, then probably the retailers will have to bear the burden. If I don't think there is a scope for the channel to squeeze in the manufacturers further. So if I look at the generic value chain, almost only 20% of the value is getting captured by the manufacturers and 80% is being captured by the channel. So roughly that number 20-80, it could also be 25-75, but it's more in favor of the supply chain though. They make most of the money on the generic drugs.
Vishal, but did you have a chat with any of the companies? Are they worried or are they also not worried like you?
So I didn't get a chance to speak to the companies on this, but I think I won't believe the stocks. There's going to be an impact here.
So should we brace ourselves for a bit of a bounce back in the pharma names, considering yesterday's news is not material to cause the decline that we had, and pharma has been doing well. In the last 3 months, the Nifty Pharma Index has moved up nearly 15%. What's the view on pharma from here on at a broader level, and then if you could get to the various categories?
Right. So I think a bounce back should be expected because the news is not material, is not going to impact earnings of companies. So Cipla and Lupin were primarily more impacted because there was one drug called albuterol inhaler in that list, which was going to cost $2 or less for the patient as copay. So that hit the two companies more, and we could see a bounce back in those two names today. Overall, I think on the pharma sector, what I think is further run up from where the stocks are today largely depends on how they redeploy the large cash pools that these companies have generated over the last 3-4 years. All of these companies have a very healthy balance sheet. They just need to figure out on what is the best way to kind of put this money to use. So which one does the best in terms of, I think which one does the best in terms of inorganic route play would probably do the best among the pharma names. I think Sun Pharma is best poised in terms of leveraging capabilities for acquisitions.
By the way, Divis had a massive move day before yesterday. Just your thoughts, Vishal, what's going on there?
So I think a great company, Divis is a great company. Everything is going right. So what's expected is they're going to grow mid-teens, high teens kind of growth rates. But I think valuations is something we need to really look at. They seem to be very expensive. So that's a call I think investors would rather take on valuations. It's a matter of how do they look at things relatively is also important. But I think valuations, I find them very steep on Divis.
Market cap of Divi's laboratory has now crossed 1.5 lakh crore. And I think it's become the second, largest in terms of market cap in the pharmaceutical space in India. So big move.
So almost trading at 20 times
Yeah.
revenue.
Go ahead.
Almost trading at 20 times revenue.
20 times revenue.
Yeah.
And in terms of PE?
So I think forward would be, should be around 60, 70 times, sort of those numbers.
And what would the 3-year or 5-year average be in terms of
I think
valuations?
the
for these?
long-term average is around 30. The long-term average is around 30.
You know, the stock's not returned anything. Actually, that's not correct. I mean, the stock was $4,000 in 2020.
Okay.
It's at 5,900, so 20% in 4 years, which is in the kind of market we've been. But yeah, you've got to look at valuations, as Vishal is saying. Lots of fans.
In fact, in the last
for
6 months,
Divis.
it's done quite well at Divis.
Yeah.
And you know, some of these stocks, when they're part of the Nifty and they're going to move out, then you see that kind of selling that comes in.
Yeah.
And then, in fact, you know, it recovers post that. So that's a technical factor as well at play.
Okay, all right, Vishal, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC TV 18. We'll take a